Today's guest is Paul Werp from Connected Vision Advisors, and we're going to be discussing the general market today for financing and M&A for startups. I am Tony Wood from CEO Collaborative Forum, and let's hear CEO Reflects. Paul, an incredibly warm welcome. Thank you for making the time. I know you're incredibly busy.
Yeah, thank you. I'm glad to join.
Could you just give us a quick rundown of what Connected Vision Advisors do?
Sure. We're a boutique investment bank, and we focus in on M&A and Series B and above capital raises, really helping entrepreneur CEOs take that next big step or transaction step in their business. We have everybody on the team, which is four of us. We all have deep technical and financial backgrounds.
Yep.
And what we're focusing in is what we call deep tech, is areas of like AI or artificial intelligence, IoT, computer vision, and semiconductor ecosystems. These all kind of are supporting each other in a sense. And we've done a number of transactions historically on the investment or on the acquisition side to companies like Cisco, Qualcomm, Bosch, Renesas, and many others. And really, we're full service. So we really, every client that we engage with, we really do almost everything from the beginning to the end of the transaction.
Wow. Now you said deep tech. Now, one thing that was always interests me is what's the difference between a tech startup and a deep tech startup? How would I know that I'm a deep tech and not just tech?
Well, it's kind of a broader category, and it's kind of a new word that people have been talking about, right? And really what it is these core technologies that are kind of starting to emerge. And the difference is it's what we call engineering innovation. So we have lots of research technologies, but it's not until you use from an engineering perspective that this innovation, comes forward. And what happens is it has the ability to just transform industries like you've never seen before. A great example is we've all heard of generative AI or Chat GPT. That's a kind of a great example of something that has the ability to change every industry that we're doing. You see it on the news where they're saying, "Oh, this is going to eliminate jobs," probably, but it's also going to create jobs. So it will affect industries that make sense, like publishing, copywriting, legal. Good story. I'm working from Rome this summer, and my son, young person that uses ChatGPT, said, "Hey, Dad, we can write a synopsis for a children's book in like 30 seconds." I go, I didn't believe it, right? So we have two big poodles. They want to go explore Rome, and so literally with one sentence in ChatGPT, we came out with a synopsis for the back of a book in 30 seconds that I don't think I could have written myself in 2, 3, 4 hours. So there's an example of the impact that can have. Other examples of deep tech are like semiconductors. We've seen that with, that enables AI, for example, power electronics for charging and for electric vehicles, computer vision, that for monitoring security could be used good and bad. And then, simple things like speech, the ability to go, to basically transcribe the conversations that we're having right now. So that's just an example, and it has, like I said, the ability to go across industries, even though at its core technology is this transformation capabilities like AI. And then, what this really does is the companies that can figure out how to use, deep tech as a tool, it can create extraordinary value for the company versus their competitors.
So it's more than just a horizontal versus a vertical. It's actually it's larger than that.
Yes, you can think of it like AI is a great example or IoT. You think of it as one technology, but in reality, it's many verticals that use that technology to make the business, better or more profitable or more efficient.
Interesting. And so when you're out there and you're looking at a lot of these startups, which I assume you do, what's the feeling that you get? What's happening in the market today when they're wanting finance or M&A deals? What's your kind of impression right now?
Well, it's tough, right? And everybody's trying to adapt to this new market reality post COVID.
Yeah.
In general, valuations are down 30 or 40% from 2021 when it had peaked.
Okay.
Um, and given this market strength, really from 2020 to 2022, lots of funding happened, generous valuations, and then even a lot of companies that should have never been funded in the first place. It just there was a lot of enthusiasm. We call that a bubble. So again, high valuations, too many companies being funded, which means quality is going down. And and the other element that's kind of what we're seeing is with the existing companies that have gotten funding, the market is a little bit frozen. No one wants to do another funding round that has the valuation of the company dropping down significantly, like I just spoke. So what happens is people are looking for alternatives. How do I get to past this, call it downturn or tough times in the market? So that's the challenge that are going on, and really what companies are trying to do or boards are recommending is to be careful, right? Bring down the amount of money you're spending, narrow your focus. At the end of the day, customers are and clients are key to your long-term business success.
So I mean, so there's this big pressure to find maybe other sources to not have a down round. So what should they do if they've got this big push from investors? What should these companies do when they're almost being forced? They've got a runway. That's the definition of a startup. What would they do?
The key thing is conserve cash, right?
Right.
Nothing makes an investor feel better than when they see, basically the people running the company being efficient with the cash they're using. Narrow the focus, right? A lot of times what happens in a boom cycle is, there's so much enthusiasm, you want to go after everything, right? But it's hard to be great at everything, right? So, but that's also been an opportunity to see what are the best segments to focus in on. So really what we say, conserve cash, narrow the focus, maybe trim the workforce, given the conditions, and focusing on the best opportunities that folks have. There's a good example. A CEO friend of mine had called me. He had exited his company, for 220 million on 30 million invested capital. Right before the pandemic really went into full force.
Good timing.
And he was, yeah, which is good timing, right? And
Yeah.
he was asking me, well, hey, there's this new company, has great technology, but the revenue didn't hit as expected. They're spending $18 million a year on 35 or 40 people, which is
That's a lot.
crazy if you do the math. And he asked that same question. I'm like, hey, what you really need to do is, what are those key things you need to focus in on? Where are those key customers, right? Make sure that you bring down your spending and get to market with a few things, not everything. And I think there's a sign the company was trying to focus on too many segments and not on where the best opportunities were. So that's kind of one of the the key things that we would recommend. And the other element is in terms of CEOs and boards is in this tough time climate, there's opportunities for strategic investments or acquisitions, but you have to really look closely. Can that deal consummate? Because the way the market is today, there's there's going to be challenges. Will that buyer take it to conclusion? Then there's other risks, like in AI. There's regulatory risk between
Especially in Europe
Russia, China, and the Western world, right? And that's one of the things that we're dealing with right now is how do you get something to the finish line when somebody's worried that this technology can leak to a part of the world that they don't want to see happen. So based on that, what we really recommend, especially these trying times, having an investment advisor, can be a great asset. And of course, what we focus in on, but there's a whole host of industries because we're talking about the broader market, and an advisor can really give you, ideas on how to narrow the focus and then look to avenues that can really enhance your business or get you to the next step.
It's interesting. You were saying to focus your market or focus your product, release something maybe in MVP early. So are those sorts an example of the things that investors or M&A buyers are looking for in the market today? Are anything else that they're looking for, which are, oh my goodness, if I see that, I'm
Yeah.
in.
Well, I think sometimes in tough market conditions, simplicity is
Yeah.
everything, right? It's easy to understand your business. It's not hard to figure out how it would how it would help. But what are M&A buyers looking for at the moment? They're looking for stuff that strategically enhances their business, and or something that has can be cash flow neutral. No one's looking for something that's going to significantly increase their burn rate, but what they are looking for is something that can help their top line and can also potentially provide synergies within an 18-month period that can add profit. They're not looking for the strategic acquisition that will pay dividends in 5 years from now. A semiconductor company in the $400 million range had called me in their corporate dev office asking the simple question, hey Paul, we're looking for acquisitions that are in the $50 million range, at least break even. And why is he calling us? Is because there's good value. We already said valuations for private companies are down significantly. So he's looking for something that increases his top line, but doesn't really burn too much money. And with synergies and maybe his channel and sales force, he can rapidly grow it. So that's just an example of what's happening in the marketplace today and what companies and buyers are looking for.
You said try and align with the investor or the M&A company, and how would I say as a CEO do that? How would I know what's in your mind? Is there any clues or any kind of tricks of the trade that you could share?
Well, it's interesting you bring that up because when it comes down to strategic investments, we're not talking venture capital, but
Yep.
strategic investors or M&A by strategics or acquirers. They're 75% of the time, what happens is they already know the company that they're interested in, either investing or buying, right?
Interesting.
So we always recommend to the boards and CEOs is like, who are those on one hand or two hands? What in your segment of the market, which ones will make the biggest impact, or kind of rolling the dice can give you that luck, that exit luck that you're looking for, and that's done by having good relationships with companies that could invest in you or could acquire you. Great. Example. OpenAI, which ChatGPT has a great relationship with Microsoft, and all of a sudden, $10 billion investment by Microsoft, and more than likely, who knows what's going to happen in the world, probably acquired by Microsoft. You never know, but it's just a natural step, and you've seen that published in the business press as a likely scenario.
I mean, is it this reason, this networking or knowing people? Is this some of the reasons why some of these companies just seem to break all the rules and just seem to break out when like nobody expects it? Is it this back pre-wire work that they're doing?
Yeah, I mean, there's a few things that one, it's got to be a hot market, right? That shows, like we're talking deep tech potential to transform industries, right? AI, we keep on talking about it, but it's huge, right? I mean, if you look at it just in what we're saying in an investment climate that's not good, over $14 billion has been deployed in 2023 alone. Now, granted, 10 billion went to OpenAI, but that still leaves over 4 billion to a host of generative AI companies, which is an increase of 40% from last year in 2022. That's contrary to the overall market, which is down 40 or 50% on the investment side. So that tells you the market that you're in, that you're participating in, has a big impact. The other one is, what do investors look for in that care? They look for for executives that have a proven track record, in that from that overall excitement, right? So for example, Marisol AI, which is a Chat GPT or OpenAI competitor in France, 4 weeks old, raised $113 million. And where do those executives come? From DeepMind, close to you in London, which is part of Alphabet or Google. So that's just as an example. And then you see the profile of that. Eric Schmidt is an investor and an advisor. He was a former CEO of Google. And this sounds kind of crazy, but those type of companies, when you're in a segment of a profile, a hot market, money can make a difference. That's probably the other element. In other words, if you invest really heavily, you can get way ahead of your your competitors. And then finally, it's that team, right? Is that team do they have that track record that gets people excited? And then what happens is these companies tend to get acquired sooner rather than later. It doesn't necessarily mean that their business was fantastic. It just they took advantage of the excitement and the bubble in that specific segment.
I mean, you sparked off two questions just as you were talking, and I was thinking, first of all, how do you know if someone's AI washing? Like they've just added AI and they said, I'm using a little bit of AI, so therefore they can go into that budget. And the second is, how do I know if I've got the right team? I mean, I've probably, if I've done it before and maybe I've only done it once, I may not know. How do I know those? How do you tell if someone's AI washing, and how do you know if you've got the right team?
On AI washing, because as bankers, we're trying to pick clients and AI to work with.
Yeah.
The key is just questions, right? Because what happens is, as you know, when it becomes a fad, everybody says, "Oh, we're AI enabled," right?
Yeah.
Well, then you start asking questions. What kind of algorithms are you using, right? What makes it differentiated, right? Everybody's doing AI, let's say in a particular, segment for, let's say, on the edge, like in an IoT sensor device. But what algorithms are you using? And what are who are your competitors, and why are you so much better than them? So those are the basic questions that, as an investor or an acquirer, you're going to ask. Because we ask them ahead of time too, because there's nothing worse than being a banker or advisor without asking the details and understanding it. You get halfway through the process and you realize you can't see the success coming because you miss some of the details that makes that company that should make it attractive in the market, if that makes sense.
And then so you've got this element of due diligence. That must be quite an in-depth process for you as an investor to go in and go, right, what's their tech? What's their team? How is their team going to work? How are they going to perform against these challenges? How do you even start doing that?
Well, the key thing is that's why in today's market, especially, the lead investor is the most important one. The person that puts the term sheet for investment down is they're doing most of the diligence and should have most of the expertise. So if you're a follow-on or a co-investor, do you believe in the lead investor? Do they have that technical depth and detail, or the architects that should know what's going on, that can give you some kind of faith that this is the right direction and that there's substance there, right? So besides that, it's I think there's that element of, do you trust that team? Are they believable? Do they have the background, right? I think in this deep tech stuff, it's no different than any industry, right? It's the people matter. Do they have the experience? Do they have that leadership ability? You're going to recruit them, but can they recruit top people, and can they make the right leadership choices for their team, right? So that doesn't change from deep tech to if you're a cardboard factory, right? The leadership team that you have managing that is really important, makes a difference. And they have to have that experience. They have to be competent, and they have to know how to get their team engaged for this innovation.
So if we were to flip this around, what one piece of advice would you give to a firm, a business that's looking for that investment? How could they make sure that you're going to pick them, as it were? What would they do? What's your advice to them?
I think the key is one, can they present things in a simple way, right? I mean, their business may be very, very complex, but they have to be able to explain that story and the opportunity in a very succinct and simple perspective, right? If they put that together, people can understand it. You have to show that this might be really complex technology, but for example, publishing isn't that complicated, right? But let's say generative AI can make that business run a lot more efficiently potentially, right? So being able to tell that story, showing, first impressions a lasting one, right? So in today's climate, clarity on financials, focus, customers. That's probably especially now, giving clarity versus trying to be everything to everybody. This is not the time for that.
That's awesome. Paul, look, I have learned so much just talking to you for a little bit, and I'm sure everybody who's watching and listening has done as well. I just really wanted to say thank you so much for your time. I know you're busy and you gave the time for CEO Reflect. So, Paul, amazing. Thank you so much, sir.
Thank you, Tony. Anytime. Would love to do it again.
I'd love to have you back. Thank you, Paul. Take care.
Sure. Bye-bye.